Hey everyone, this is Morten, ForexPeaceArmy.com. Today, as usual, we're going to check out gold. Nothing really new to report at the moment. We've already covered everything we needed to in our weekly review. The latest news on American financial policy domestically, on the international stage, recent events, statistical data, and more. Today we're going to focus right on the technical picture and check out how gold is performing compared to the plan we put together over the weekend. Let's kick off with the daily chart. So here last time we talked about Monday, this candlestick that we have here. Our main goal was to dodge that potential bearish grabber on the daily chart. If you look at the charts of retail brokers, in my case that's FXCM, here we didn't get a grabber. Things look okay here, but when you're not sure, it's always good to check what's going on in the futures market. And here, if you look at the futures on the Chicago exchange, you will see that in the October futures, a grabber has formed right here. This introduces certain unpleasant aspects into trading, because a bearish grabber always poses a risk for opening a long position, especially when it is still active, based on the price dynamic. It doesn't make logical sense to see any bearish signal here, since we had quite a strong push upward. Overall, the dynamics and investor sentiment have changed regarding Fed policy. Constant threats about Jerome Powell stepping down, and it was already announced, I think Besant said, that it will happen in almost just a few weeks. Looking at it this way, things should be fine, but gold is still a bit of a different beast compared to Forex or interest rates. Important negotiations with Russia will take place this week. If you remember, Donald Trump issued a certain ultimatum, possible secondary sanctions on Russian oil, and so on. And if some kind of easing suddenly happens there, I do not rule out that this grabber could cause certain troubles for the bulls in the market. I can't say for sure whether it will reach its target, because the target of this grabber is quite significant. If this pattern starts to play out, the market should drop back to the previous low. And that, as you can probably guess, would mean the bullish reversal is breaking down and we might keep heading south. So let's just watch for now, but overall at the moment this grabber is a source of risk for us. Despite the fact that in other markets, for example the pound, we discussed the Forex market today, and the euro, we are expecting some further upward movement everywhere after a correction. In principle, we are expecting this on gold as well, but the appearance of this pattern is not looking great for this strategy. Next, what do we have on the 4-hour chart? Overall, the market is playing out just as we expected. Gold touched resistance around 33.73 and started moving downward. We're seeing a pullback now. We talked about support levels. The key level we're watching is 33.30 to 33.40. That's where we're seeing a lot of congestion. Here it is stronger, so if the market reaches this level, this will be the first level we consider for a possible purchase. Again, keeping in mind the grabber on the daily chart. That is, this will pose a certain threat. Right now, the gold market situation is more touchy than other markets. So, for now, I think that at the moment nothing needs to be done, because to open a long position while the market is still near the highs, we need to wait for some correction for it to reach certain levels. To open bearish positions, theoretically you can try. Open short positions based on the grabber. There are, in fact, some attractive aspects here. That is, the critical point of this pattern is very close. You can set your stop-loss order pretty tight here. It's kind of like a let's try our luck type of trade. The risk is quite small, but the risk that this grabber won't work is also quite high. So it's totally up to you. I would generally focus on our main plan. Ours is bullish. Let's wait and see what happens when the market hits that support level and how it reacts there.